Good morning, traders. This is Brad Matheny. Today is the 23rd. We have a unique setup. Let me see if I can find it real quick. We will come here to here, and here. We have a unique cycle pattern setup, which is occurring today, which is a base rally, followed by a Harami inside line, followed by a crush on the weekend, Saturday, which would likely indicate a volatile potential downward move, a bottom setting up on Sunday, a major crush on Monday, which could be extreme volatility on Monday. Then we have a blank day, followed by a gap potential, a gap reversal, a breakdown, then a breakaway on Saturday, a carryover on Sunday, and then a crush, then a flat down. Generally, this is setting up, the way I look at it, ladies and gentlemen, is I try to read these as paragraphs. So as we're moving into this base rally, Harami, crush, bottom, major crush, I'm looking at the base rally as a potential bottom, coinciding with this bottom here on Sunday, which may prompt a big move to the upside on Monday, the 27th. We'll see how this plays out, but I'm going to show you on the charts how I try to read these as well. Then we have gap potential, gap reversal, breakdown, breakaway, then carryover, crush, flat down. So going into early March, we don't have any real bottoming setup yet. We do have some volatility, some potential gaps, and at one big crush bar on March 6th, which could be very interesting, ladies and gentlemen. So we're still at that breakaway flag apex type scenario where volatility is going to be key to understanding what's coming in the future. But as we move into this, I want you to be aware that these are likely going to see some pretty big swings. And I'm going to take you to a chart here in a moment that I don't often show. It is the Fibonacci Price Modeling system. I'll take you right back here to my server. This is an e-signal server running a whole bunch of proprietary data. For example, if I were to come over here, you will see code, and you will see here a bunch of data that I'm working on with another project for automated trading. This is something that is in the works, a lot of coding, a lot of work. This is the setup. You can see I've got it running here on a number of different symbols. I will flip it back here to short term. And these are the signals this morning. And you can see that we have a lot of signals loading up right now. Overnight signals. You can see these will all reset at 6:30 in the morning, and it'll start tracking and auto trading over here. This is the auto trader. This is essentially a feeder. This is a consolidator. This handles all the auto trading. This handles all the signals. But back to the fib charts. Okay, this is my Fibonacci price modeling system, and I want to talk to you about a top-down structure that I look at with regards to price data. The way this works is very simple. This is an automated adaptive learning structure. And for example, these red lines are what's called the Fibonacci price trigger level. The green lines are also Fibonacci bullish price trigger levels. Red lines are bearish trigger levels. So as you can see here, we had been in an uptrend. This is weekly. So this is 2021 back over here. Let me shrink this down a little bit so you can see it. And in an uptrend, what will happen is we will get very large expansion waves moving higher. And depending on where the red level is, in this case, the red and the green level happen at the same level. This is basically becomes a critical support level. Once we close above this green level and stay above the previous green level, we're technically in an uptrend. So essentially, once we get above one new green level and above the previous green level, we are in an uptrend. If we were to get below this red level and then roll back down and set up another red level and then move downward, we would be technically in a downtrend. So as you can see, we moved up here. We came up above this green level here, never touched this red level. This is still confirmation of an uptrend. We rolled below this red level. This tells us that we are early warning bearish. In other words, intermediate term bearish. Still in an uptrend until we get another red level and close below it, which we did right here. This then qualifies us as a bearish trend. So let me go ahead and set this up with a vertical line indicating that we are now in a bearish trend. So set it up as a bright red. And we are done. So this was a confirmation of a bullish trend. So let me come over here, duplicate, drag, or a continuation of a bullish trend. Let's see if I can get this lined up right. There we go. So as we move forward, I want you to pay attention to how we are setting up here. Now, we've got a confirmation of a bearish trend. We're looking for another red trigger here or confirmation of higher greens. So we have another red here. We've come back down, closed below that. We've got a green closed above it. So this is, again, more confirmation of a bearish trend. This is a moderate upside pullback. Now we come back over to this red level. So let's go zoom in. And let's take a look at this red level here so you can see. This red level we never closed below. We failed to establish a new bearish trend at this level. So again, let's draw this and indicate right here that this is now a potential trend reversal. What this is telling us, ladies and gentlemen, is that trend is changing. We have failed to get below this level right here, which was our next trigger level, and now we're in this wild rotational setup. The Fibonacci Price Modeling system indicated this as our last green level, so as long as we stay above this level going forward, which we are in an upward trend and upward pullback. So I would call this an upward trend in a general neutral bullish, I should rephrase that, neutral potential bearish trending mode. So in other words, our last confirmed trigger was right here. This was our last confirmed trigger. So here we have this, duplicate, drag this over here. Actually, it was right here. That is our last confirmed bearish trigger. We are in a bearish trigger because we've got confirmation of lower breakdowns of lower red Fibonacci trigger levels. Now at this point we move into potential bullish trending because we've moved up above this green trigger level. We are, as long as we stay below this level, we are potentially looking at confirmation of a downward trend. This new level showed up and failed to confirm. That's why we draw this blue line. This is a failure of a new downward trend. So this tells us now that we may be changing direction. We may be rolling back to the upside. Remember, Fibonacci price theory is that price always attempts to form new highs and new lows. So failure to establish a new low at this point right here, failure to break below this level means that price failed to get into any type of a downward confirmation of trending. So obviously if it fails to go down and establish a new low, the opposite side is it's going to come up and attempt to establish a new high, which it has done. Remember, this is a weekly chart. So now at this point, you can see we have a green trigger level way up here at 427, and we have a red trigger level way down here at 453, 15. So at this point, ladies and gentlemen, on a weekly basis, we have got a failure of a downward trend. We've got a potential major bottom setting up right here with this little triangle. We are in a sideways channel. And as long as we stay above this channel right here, this green line, which I will draw a horizontal line so you can see it. As long as we essentially stay above this level, we are in a potential bullish trend. A bullish pullback, let's call it, in a predominant bearish trend. We would need to either move downward, which we are doing right now, and this will establish a potential new low in a week or so, depending on how the rotation is. Remember, these are fractal pivots. That's how this works, just like a zigzag or an Elliott wave structure. In fact, this is essentially an Elliott wave structure. If you look back over here, you'll see that we have intermediate zigzags being drawn in red and green. You can see a little green line here, a little red line here. And then you can see we have major pivots being drawn in these dashed lines. This is a major peak indicator right here, this little white line. This is a potential major bottom indicator being drawn right here in this yellow. This will confirm as this new setup occurs, okay? So in other words, we can identify it as a potential bottom, but we can only determine it as a true bottom once we determine a new wave structure out over here. So overall, the volatility right now is between this range. So this is telling us that we have a very wide volatile range taking place in the market to be able to establish a new trend. Price must move above 427 roughly or below 352.82 in order to establish a new trend right now. Now, ideally, we could go ahead and use this level. So hypothetically, we could come to a middle ground and say, look, this is our line in the sand, okay, right here. This is our critical support level, 385, roughly 382. And this basically says as long as we're above this upper channel where the yellow line is, we are still bullish. If we get below this red line here, then we go into a moderate bearish trending. So understand that these previous trigger levels become very critical support and resistance. For example, you can see we got two lines right here, very close to one another, the red and the green. This becomes a very important support level at, as I've been telling you, about 400, 401. So pay attention to this. Now, this is weekly. So weekly, where are we? We are failed to get into a bearish trend. We're in a presumed upside trend because of the failure of this level here and the confirmation of getting above this green trigger here and staying above that green trigger level. That tells us that we are in a bullish trend. So you can consider that a bullish intermediate trend in a broader downward trending cycle. Why? Because we have yet to get the confirmation of the second upward trend confirmation. So now let's go to daily, and it's going to get a little more complicated here because the daily is going to provide us a shorter time frame for us to confirm. So now, did we get two confirmations to the upside? Let's take a look at this from a standpoint of actually looking how this works. So here's a downtrend. We roll down. We're in a downtrend. We get confirmation here. We get into a downward trend. We pull back. We get our second confirmation right here. Here's a red level. Actually, there's another one right here. Let me drag this over. Try to show you. I'm trying to show you historically how this works. So here we have a red level confirmation of a downtrend. We had other confirmations way back, but just as a big downtrend, we can get intermediate downtrend confirmation right here at 449. That means we've seen it break below this level. We are in a downtrend. Now, secondarily, we need a new downtrend level. So we get a little pullback right here. We get a little breakdown again. This is a new downtrend. We are in a confirmed downtrend. We get a little green level. It breaks above it. It is a lower green level. So this is an intermediate pullback, basically a bullish, intermediate bullish trend in a downtrend. Now we come down here, we get another red level, we break down below it, we're in another downtrend. Why? Because we have a higher downtrend here, we have downtrend confirmation here, we have new downtrend confirmation here. We do not yet have any real upward trending green lines. That's what we're looking for. Remember, downtrends are going to show us lower red lines going down. Uptrends are going to show us higher green lines going up. So this is, again, downtrend. Come down here, we reach a bottom. This is June. We get slightly above this. We go into a moderate uptrend. We get into some consolidation. There's a red line right over here. You can see it. This is sideways channeling. This is telling us this is the ultimate low. Okay, so it's telling us here that we are failing to move above. We get this nice little channel right in this area, and look at where this is, 386 roughly. So this is going to become a very solid channel going forward on our chart because we get all of these little lines right here. This means that we're forming very strong support and resistance right in this area. Ultimately, we do break out eventually to the upside here. Now, we get a little upside move here. We get a higher green right here. Look at this. This now tells us we're in an uptrend. So at this point, we can start safely assuming we're in an uptrend. Now we come back over here. We roll into an intermediate downtrend, meaning we're confirmed in an uptrend. We get an intermediate downtrend. We roll downward. We get our second red line right here, which confirms. This tells us we're now in a downtrend. Why? Ladies and gentlemen, we have the lower green level here. We have the two confirmed red levels here. We broke below this level here. We broke below this level here. This is a confirmed downtrend. We get all the way down into this area, and now we get to the October bottom. So we got lower green, lower red, lower green, and then eventually we roll over here. And you can see as we roll upward, okay, we start to get this rotation here. We get above it, which fails. We come back down. We get another green level right here, which tells us we are in an uptrend. How do we confirm this? We have a lower green level. That's another server. Yes, I stay remotely connected all over the place. We got another green level right here that confirms our upward trend. And what we're looking at here, ladies and gentlemen, is we have a confirmed upward trend. We have an intermediate downward pullback right now based on the daily chart. Spread this out. Try to get the blocks down here at the bottom. I'll explain the blocks here in a minute. We have a confirmed upward trend. We are in a bullish trend, and what we're looking at here, ladies and gentlemen, is we need to move above this 409.50 roughly level, this green level here, which will move down as this establishes a new low. So this will move down with new bars, but we need to move above this 409 level, which will move probably down into this 404.25 level in order to reconfirm a bullish upward trend. And in order for us to move, we are currently in a bearish intermediate trend. So this is telling us because we're below this red level here, we are in an intermediate downside trending in a longer term confirmed bullish upward trend. So long term, we're expecting the markets to continue to move higher. Short term or intermediate term, we're expecting the markets to move downward. I hope that's clear as far as what Fibonacci is showing us. Now you can use this in other various forms. You can use this in, taking aggressive moves, targeting down here until we get the green bar or other functions. You also have projected levels, for example, these little blocks that are being drawn out here with these lines. These are projected support and resistance levels. You will see them. I also have a mechanism I call convergence, which is where they overlap. So for example, an uptrend should be higher, a downtrend should be lower in this structure. But if we get into a point where volatility is excessive and we get a downward cycle that is above one of the upper cycles, then we have what's called confluence, meaning that we have a shift in price taking place, but we don't have that in place right now. So now let's come over here and take a look at what we have here for the 60-minute. This is the SPY 60-minute. And what we're doing here, ladies and gentlemen, is the same structure. So you can see here we had reached this peak back on the 15th. Shrink it down a little bit. We reached this peak up here on the 15th. We had a bearish trend line trigger here. Okay, we broke below it. Okay, intermediate down, let's call this intermediate downward trend cycle. Then we had this lower channel here, which we never touched, upper channel here. Ask yourself, why are these so wide? Because we're in rotation. So in order to move away from this rotation, we have to see some fairly big price trend. Then eventually we get this level here, which we do eventually break below right here. So this moves us into intermediate 60-minute downward bearish trending. Okay, in order for us to get above this, we need to see two confirmed upward trends. Then we get another red line here, which breaks below it. We get another red line here, breaks below it. This is more confirmed bearish trending. We come back here. We got another red line here. We break below it. This is telling us that we're in a downtrend, folks, intermediate. So understand, weekly is in an uptrend, daily is in a downtrend, and weekly is in 60-minute is in a downtrend. Now look at the Fibonacci structure here. So we have a deep green line here. We're above it right now on the SPY. This is an intermediate upside trend in a broader downward trend on the 60-minute structure. We would look for a pullback over here. So I'm going to move this over here, grab this. We would look for a pullback that sets up a new low, potentially drawing a new Fibonacci trigger level somewhere over here in green. And what we would look for is a confirmation of an upward trend by watching this new higher Fibonacci level trigger. Then we would eventually get another Fibonacci level triggering up here somewhere, or potentially back over here as this pullback happens. And this would confirm that we now have upward trending taking place. So understand that this would confirm that we have upward trending. Once we get above this level, then get above this level. So we basically would need two upward channel confirmations off green Fibonacci trigger levels to occur. Now back over here on the daily chart, where are we? We have one confirmation here. We have no lower red levels. So in other words, this higher red level is telling us that we are not in a bullish trend anymore. This new green level here at 409.51 is the next confirmation level, which will eventually move down to around 404, 403. But again, if we rally back above 404 here, we are in confirmed bullish trending. And that's technically how everything is working. So as you can see from this scenario here, we have confirmation of an upward trend here. We have no confirmation, then confirmation of an upward trend here. We do not have lower red levels. We have a red level here. We have a red level here. We have a red level here. And then we have a red level here. We are seeing higher red levels. That means that we're in an uptrend, folks. This is a bullish trend setting up. We do not have any confirmation of any bearish trends yet. We have not seen any confirmation of a bearish trend for a while. We need to understand that we are in a moderate downward 60-minute bearish cycle in a broader bullish cycle on the daily chart. And if we come back to weekly, pay attention that we are in a early stage bullish cycle, rotating in this very wide range, looking at this 427, 428 area as the next trigger level. Now we will get, just so you know, we will get a new trigger level off of this low once this resolves, depending on where it resolves. Could be down here, could be over here, don't know, but we will get a new green bullish trigger level right around this area probably, which will become our next target for a bullish confirmation. Why is this so important? Understand, folks, that even though we have this one up here showing us a potential target level in the future near 427, 428, if we get a higher green level right here and price moves above it and confirms, this is still good. This is still qualifying us as a upside move. Price would have to move all the way back down here to this area to qualify a bearish trend. So pay attention. We are in an upside price trend right now, folks. We're just looking for a base, looking for a bottom, and attempting to resolve back to the upside. Okay, guys, follow along. Oh, by the way, the very cool new structure system that I built for you guys, this TT 3 MACD strategy, is looking very positive. I've been playing around with it. So for example, you know, you can run it on a 5 minute like I've done here. Try to zoom this down a little bit. This is the ES 5 minute. You can see that we are currently in a bullish trend here. This is a 5 minute ES. We're looking to the upside, but it's very cool in the sense that, you know, you can go out to 60 minute, take a look at the time frame, go down here to 60 minute. You can see that we've been in a bearish trend for the past 5-6 days. You can see the bearish trending here. You can see the bearish signal here. Target 1, target 2 stayed bearish this entire time on a 60-minute basis. You come back here to a 30-minute. Come back here to a 30-minute. And where we're at with this is we had been bearish back over here. You can see downward trending, downward trending, downward trending. We recently had a buy signal here that reverted back to a sell signal here. We're looking at a sell trigger here, which confirmed right back over here. Beautiful little sell trigger. We're in kind of an upward cycle mode right now, meaning things are changing. But what I'm recommending is that this is for day traders, and essentially use a 5 minute and maybe intermix a 1 minute involved in, because the 1 minute provides some great little scalping triggers. You can see here we're getting targets very easily. So you can see we have, you know, hypothetically around this area, you know, you're in a buy trigger. You can watch the center line of the linear regression channel. You can be targeting up here. I see roughly 2 points here on the ES. Sell trigger here. Watch the center line. You got a sell trigger here. Try to get in around the center line and targeting down around these areas here. You have the opportunity roughly of about 2 points again. You got the same scenario here. You got a buy trigger. Come back over here. You got a buy trigger right over here. You got a nice little move to the upside. This gave you a good little opportunity, probably for 5 or 6 points. Remember, this is a 1 minute. Then you got a roll over here. So it gave you some weakness here. We reached our targets. We got a nice little move here. But the idea here is you trade the trend that is confirmed with these triggers. So in this buy mode, you have buy triggers down here. So you're looking to only go long. You wouldn't be trading this short mode. Short mode, you would wait until we get short over here. Then you would look for opportunities back over here. Or if we had a downward sloping channel here, which we do. Buy mode here, you're looking for confirmation here, which we have. You're looking for upward sloping linear regression, which we have. It gives you an opportunity to get in. We're also looking to this wave cycle, seeing if we're positive. So this gives you a kind of a triple confirmation, almost a quadruple confirmation. Buy trigger here. Are we sloping upward? Yes. Are we in green wave formation? Yes. Are we in Donchian upward formation? Yes. New sell trigger back over here. Are we in downward sloping? Yes. Are we in downward wave formation? Yes. Are we in Donchian bearish? Yes. This gives you the opportunity to try to target the downside move here. Okay. It's not 100%, but it is something to help you gauge and identify trends that are occurring. So we are still in this upward trend on the 5 minute. Remember, you probably want to combine 1 minute and 5 minute, meaning try not to trade against the 5 minute on the 1 minute. Just pick your trades and be cautious. Don't chase things because the markets have a tendency to revert and stall. You can see this sideways trading that we had all day yesterday. This is, you know, it is rather dangerous at times for you to be involved in this sideways trending. You have to learn to take little profits and reduce your risk, move your stop so that you don't have any broad exposure and go from there. Okay, this is coming, guys. As soon as I get this strategy ready, I'll post it up on TradingView and get it ready for you guys. In the meantime, I hope this Fibonacci structure has been helpful. We will talk soon. Bye.